really excited for this next guest, Kristin Posser with the Accounting Collective. Kristin, give us a little background on what you do.
Sure. So I work with various different small businesses and their owners on anything tax and accounting, from basic monthly bookkeeping to tax returns, sales tax returns, payroll, anything numbers and finance, we take care of it.
Well, that is wonderful. And I will say, I'll just kick this off by saying that I get asked a lot the question of who do I hire first or who do I hire next? And my answer has always been the same since the start of this company, is that you always hire what you're weakest at or where you need the most help. And certainly one of the fundamental realities of any business ownership is incorporating it properly, paying your taxes properly, and making sure that all of the tax laws that do change are being followed up on properly by your business. So when Kristin and I started talking about this, she has clients in our spectrum that work in the same capacity, and she certainly has saved them plenty of money. And in my world, the last thing I want to do is touch accounting. So that's one thing that I could definitely share as a value that you bring to the table. So Kristin, one of the biggest things people want to know is what to do first. So they've established that they want to go on their own. They don't know what to do. Obviously there's some legal structure that they want to start setting up. So what do you think they should do first?
So the first thing is to set up some sort of legal entity for your business. Now, you can be a sole proprietor and still have a legal entity, and I always recommend that. So for liability purposes, it always makes sense to set up an LLC. You can do this on LegalZoom, you can hire an attorney to do this, you can do it in a number of ways, but for instance, I did it on LegalZoom for about $400 several years ago. It was very simple. They give you all the steps. And once you set up an LLC, it basically gives you the liability protection of a company. So if somebody were to try to sue your company, they're not suing you personally.
So this extends beyond just accounting. This is even for risk management, risk mitigation, from an insurance liability when you're on site. If you are working with clients or with contracts, from errors and omissions to all those other legal covenants that could certainly backfire on you if you don't know what you're doing. But the LLC, you think, is probably the first out the gate thing to do.
Right.
Okay.
Right. And then from there, you can decide. So once you set up an LLC, that's considered a disregarded entity for federal tax purposes, which basically means you don't file a separate tax return for it. So you get to report all of your business income and expenses right on your personal tax return. You pay tax on your individual rate on those expenses and the income.
So LLC obviously is the best way to start out, but what are the key benefits of that in terms of financial tax filing as well as insurance benefits? Like, how can people kind of gain from that status change?
Right, so once you make the leap to set up a legal entity, basically it gives you liability coverage. So when you set up an LLC, it says, you know, I'm still a sole proprietor, but I want to get liability coverage in case somebody sues me.
Sure.
So if something happens and somebody files a lawsuit, they're suing your company and not you personally, which makes a big difference. You don't want people to be able to come after your personal assets. So that is the main reason that you would set up an LLC versus just, you know, being a sole proprietor and running things on your own kind of willy-nilly.
That's incredible advice, because really having that shelter and making sure that you really separate the work life from the personal life is really something that people can regret not doing. You know, when you lose your home to something of that nature, it's very important that you separate those two entities. So that's wonderful advice. What threshold of income do you think that it takes to kind of get to the next step? Like once you've established yourself as an LLC, you've done maybe, you know, let's call it $200,000 in business maybe. What is the threshold and what's the next step?
So the next step, basically, I get this question a lot, and it kind of depends. I look at the net income, not the gross income. So we want to take your gross income and then take out all of the business expenses. What's left over is your net income, and that's the number you want to look at when deciding when to go from being an LLC to a C Corp or an S Corp.
Sure.
Now, this really depends on the state that you're in. So California is very S Corp friendly. I tell all of my clients, you need to become an S Corp. But there are certain states like Tennessee, for instance, where the S Corp is basically dead. So you want to stay an LLC, and it's just state tax filing issues. So you can talk to your tax advisor. You can honestly look it up on Google. And what happens is all of a sudden you make an election to be taxed as a corporation, and then you have to file a separate tax return.
Sure.
And I usually say it's at about the $40,000 net income mark. And the reason that we do this is because when you are filing all of your business income and expenses on your personal return, you pay self-employment tax. So it's essentially you're paying payroll tax for yourself as an employee and as an employer. So that's about 15%
Oh my gosh,
extra
yeah.
that you're paying. So, I mean, let's just say for round numbers, you take $100,000 of net income, that's an extra 15 grand of tax that
Sure.
you don't necessarily have to pay if you were an S Corp.
And is that true for our Canadian friends as well? Are they having the same kind of taxation issues?
Yes, and that is true for them too. They have something similar to an LLC where you file it on your T1 return, which is your individual income tax return if you're a small business. And then once you incorporate, you file the T1 return and the T2 return, so you have your business and your personal.
But what is that magic? What is that magic write-off value? People always want to know what they can write off, right?
Yeah.
A lot of people are pushing their home office, or their cars, or their pencils, or even their Christian Louboutin heels. And there is definitely something that you want to be aware of, because it might make you more prone to be audited, right? But there also is a very fair benefit to owning a business that I'm sure almost every business owner has considered,
Yes.
and that is the wonderful but dangerous word about write-offs. So let's talk about that.
Yes, let's. I get that question a lot, and it really does depend on your industry. So I have some clients that are influencers and they're YouTubers, and they do write off some of their Christian Louboutins, you know, because they do videos about them and they're posting about them and reviewing them. So sometimes it does make sense. But for most businesses, most small businesses, there are certain things that every business can write off, and certain things that no business can write off. So some of the basic things that I always tell my clients right off the bat, when you start your own business, the car ends up usually being one of the bigger write-offs. And if you buy your car through your business, you can write off a portion of your car. If you purchase it, you can write off a portion of your lease payments. You can write off gas if you're driving around to meet with clients or prospective clients, or doing, you know, video shoots or events. You get to write that off. It's a legitimate business expense.
But in America, and this is heed with caution with this, you also need to maintain a mileage log. I know that there's a lot of quantification that you have to do. A lot of people think that you can just write off that dollar amount, which all works until you, of course, could get audited. At that point, I believe the IRS asks for kind of a records and receipt book of where you drove and why those miles may have been considered, or that vehicle was considered as an asset. Is that correct?
That is true, and there's a lot of the softwares now will help you keep track of that without literally having like a diary of your mileage. So there are certain softwares where you can keep track of mileage, or
even apps. Yeah,
there's apps too that are great. And as far as the receipts go, I get that question a lot too. A lot of the accounting softwares now have, you know, a feature where you can take a picture on your phone and attach that receipt to the transaction in your QuickBooks or your Xero or wherever you're keeping your accounting data. So that's helpful too. But yeah, you want to have backup for what you're writing off. You can't just say, you know, I bought a Porsche and I'm writing off $150,000.
Well, that's very fair advice. I think that's very valuable, because everybody drives for meetings. Everybody drives for appointments, or even to and from an office. And so that's certainly something that you should consider once you declare that status. Now, could you write things off as an individual, or do you have to be an LLC?
You can still write it off as an individual if you are running a business. So it goes on your Schedule C, on your tax return. You want to keep track of it separately, like you would for a business. So people that aren't ready to, you know, purchase accounting software, which now you can get really inexpensively, but I would say keep track of it in Excel. You go through your bank statements every month. You pull out the things that are business items. So, oh, you know, I got gas to fill up on my way to LA to go to this meeting. Those sorts of things. So that's how I would keep track of it in that situation. But yes, you can still write it off.
Well, that's hugely important. I think that people want to gain the most benefit, but cautiously move forward. Which brings me to my next kind of query, and it's one of the ones that I think always gets confused with a good idea and a bad idea, and that is the home office. So certainly when starting out, you're going to want to have some kind of an established address, a place of work, but be cautious about that being a guest bedroom in a home, or that being only part of your apartment. What portion of rent can you safely and confidently write off in both America and then also in Canada? What are your thoughts on that?
So this also depends on the way that you're legally structured. If you are an S Corp, if you have a separate legal entity, you cannot write off your rent. So that that surprises some people, but once you have a legitimate business, they say you can write off rent as long as it's outside of your home.
Okay.
So the way that you write off home office is if you are a sole proprietor and you write it off on your individual income tax return. And now they have a simplified calculation for that, which makes it really easy and kind of audit proof. So that's the way I would do it. Other people, you know, they keep track of, you have to put in things like your utilities, your rent, the square footage, and you have to have designated working area in your home.
Right.
So it can't be your couch or your kitchen table. It has to be an actual office that you only use to work in. So the home office is a tricky one.
Sure. Well, that also gives people fuel to possibly invest in a WeWork membership, or at the very least, obtain a P.O. box, which is a more common address of service. As you incorporate your company, I'm of the marketing advice that it's good to have a consistent address that puts you within a common geography for where you're going to be serving, but also allows your clients to have that consistent baseline of a professional, Googleable business address, which is also good. And with the amount of shared co-working space, I think that's just, it's an avenue where I think people should be cautious, and something that the home office just gets too scary, maybe to spend that money and peel that off entirely. So when you scale your team, you're going to hire maybe your first assistant, or maybe somebody doing what you do, or an art person, somebody that joins your team. And hiring people with the amount of payroll taxes, and let's not even go into benefits yet, but let's just talk about how to do all those deductions, both in the United States and also in Canada. How do you hire somebody these days?
That's a tough one. That's a hot topic right now, especially in California with the new AB5 law. So most businesses that are starting out, they want to go hire contractors, because obviously if you're first starting out, you can't afford right off the bat to put someone on payroll full time. So you're going to want to hire contractors. There are various ways to do that that are beneficial for the contractor and for you as a business owner. You can go on Upwork and find, you know, freelance designers or whatever you need. Also through networking with people and going to places like WeWork and having networks like that, you can find contractors that are ready and willing to work on your projects. However, in certain states, California being one of them, they make it really challenging to hire contractors. And there are certain laws. There's an ABC test now that basically says if you direct their work, provide business hours for them, all of these things, that means they are an employee. There are still a lot of contractors that are considered contractors too. So don't be too scared. You can do a little research on your own on this, but do be cautious when hiring contractors.
Absolutely.
And it ends up being, probably most businesses, it's their biggest expense is outside labor.
Understood. And that's certainly something that hit our business quite a bit, being California based. I know that nationally and also in Canada, it hasn't really been a huge problem to work with independent contractors. And so going back to my experience, assuming that the new California law was not in effect, there are certain steps you have to take still with contractors. I would respond as a private entity, doing this for years, and say that you should absolutely create independent contractor agreement. There are misclassification lawsuits when you hire somebody. And if you hire a contractor for a specified amount of time and they continue to do a job, let's say in your facility, your place of business, or for multiple months or even weeks, and I think even down to days sometimes, an employee could then depart your arrangement and then sue you for misclassification. So it's very important that you state very clearly that this is an independent entity of your organization and they're here for a specified amount of time, either it be a project basis or it be a longer term, let's say 3 months, and you just need that extra help for 3 months. So make sure that you draft up an independent contractor agreement is my suggestion.
Absolutely.
Beyond that, there's obviously legal documentation that varies from the United States to Canada, but the most popular one would be that W-9 form, is that correct?
Yes.
Okay. Is there anything else that's good to know about those W-9 forms when hiring a contractor, or additional risk that people should be aware of?
Right. So you want to get that before you have them do any work for you, as well as sign the contractor agreement.
Right.
So, and that's another thing, you could have an attorney draft it. There are attorneys now that have template shops that I know of, where you can buy a template for $100 and have your contractor agreement. So it's not too difficult to find a contractor agreement, but you want to make sure you have it in writing, you have their W-9. because you'll want to make sure that there's a social security number or that they have a visa, things like that.
So the independent contractor thing is obviously a complex matter, but no one should be very scared of it. I just do think that the independent contractor agreement is super essential, and also outlining the expectations of their arrangement with you. So if they're to invoice you, which I believe is a requirement for an independent contractor to actually send you an invoice. In fact, I have experience with that, and making sure that you do not create the invoices yourself. Do not create them from your machine, from your business. Make sure that that person has a laptop that they might be using with their work with you, and that all the documentation related to their employment is coming from them independently, uncoached, so that when you do receive an invoice for services rendered, assuming that you pay them weekly or monthly or whatever it might be, that those invoices come from them as an independent party, just like the agreement of them being an independent party. That can get you in trouble. It's something that I actually know a bit about, because we were trying to be helpful by using a company computer. I was unaware of this until it was already a problem, to create an invoice for an independent contractor that was working in the building. Being helpful can sometimes be the silver bullet that gets you in trouble. So certainly consult with an attorney. That would be always our advice for all of this. However, on this point, you can be pretty sure that you have a very clear agreement if there's terms set forth, compensation included in those terms set forth, as well as that private agreement, and then of course a proper W-9 collection to obtain social security numbers. And also, if you're doing work internationally across borders, a W-8 form, which can be also very relevant. I know we work with talent from other countries, and we always collect W-8 forms. You can't pay $250,000 to a British artist without that raising some red flags, and there's certainly a way to navigate that. And most vendors should be able to furnish something. But if you do not receive a tax document before paying anybody over $600, I believe, you need to make sure that you're doing your homework before hiring them or paying them.
Right, absolutely, because you're responsible for issuing a 1099 to them. And if all of a sudden you can't track them down, you can't get a social security number, an address for them, then you basically don't get that deduction anymore.
So you've gone beyond the point of hiring contractors. Now you actually want to scale your team at a 40-hour-a-week expectation. It's an exciting time to grow for anybody. I remember when I hired my first employee, it was exciting. And then I really didn't realize what I was getting into. So talk to us about how to properly onboard. And I think that's a really key word that I'll talk about after we talk about the paperwork involved, is an onboarding process. But what do we do to protect ourselves legally when you're hiring your first employees?
So that's a really good question. And I actually am excited about all the software that there is available now for small businesses, because so many of these payroll companies that are geared for small businesses will help you with all of this at a really nominal fee. So I would say definitely check out, just doing a quick Google search of online payroll companies.
I know Gusto is one of them that also has packaged payroll and benefits as well too, which is a wonderful HR services. And those are very underrated things that I think structurally a company will come out the gate not understanding the great need for them, because they think about the Dell computers or the Apple having an HR department, and they're not thinking that they'll have a relevant need for it. But truthfully, those are such relevant services to at least have. So that can be a process of its own. So tell us about the prerequisite conditions about employing somebody and what people should think about before they start employing people.
Right, so this actually becomes an HR issue. So now all of a sudden, you're not just running your business doing, event design. You all of a sudden have to be HR savvy, and there's all these things. You have to wear all these hats, and having employees is a big one. So there are all sorts of online payroll platforms now that will give you the tools that you need to successfully onboard employees, because doing it correctly and legally is a very big deal. So when you hire an employee, you not only have to collect a W-4, which is similar to the W-9 when you have a contractor, but now you have to give them mandatory sick leave, paid vacation days, give them disability benefits. There's all sorts of benefits that go along with having an employee, and you wouldn't think about it just as a business owner, but you need to make sure that all of those things have been done legally and successfully. So otherwise, your employees could sue you.
Absolutely.
Which is unfortunate, but it does happen.
So one of the greatest things about where we're at with technology is that we have all these resources at our fingertips. So from the app-based world of Gusto, which offers you payroll benefits as well as HR services, there's a lot of apps out there. So we would encourage you to work ideally through friends that have used these applications and see what they're all about. But obviously, there's some simple tools within just QuickBooks alone that'll help you figure out how to actually calculate that. And of course, course, as you grow, as I grew my firm, we found a lot of value in an ADP or paycheck style solution that's more designed for enterprise. And that way, it allowed us a more interactive way of talking through benefits, talking through problems, with also having legal support when it came down to employment and that whole thing. But it can obviously be challenging, and they don't usually work for teams of, I would say, and this is an arbitrary figure, I would say under 5, you don't need a professional managed payroll system, and you could probably do it on a Gusto style app, but it does become an obligation of time. You've got to also figure out what's more valuable to you. Is client servicing and facing your best interest towards the work that you're doing, or about running your business, which can be a full-time job in itself, especially maintaining compliance during all of that. One of the most important things that you can do before you employ anybody is to create an onboarding document. And this would go through an overview of the company's profile, the company's mantra, all of those wonderful things that wrap kind of the HR statement. But also within a proper onboarding document, you're also setting up a fair outline of expectations for an employee. That can come down to an employee manual, rules, dress codes, all those types of things that are outlined within their employment agreement. And onboarding them properly, I think, is such an essential part of the process that I think it's overlooked. In fact, it's something that for the first almost decade of our company's existence, we didn't do. And now I can't look back at that as a more pivotal time to set expectations for employees, and also expectations for you as an employer of when they're getting paid, how to seek annual reviews, all those HR things that are very, very relevant as you grow your company. Do you have any feelings about onboarding employees, and what steps do you think are must-haves in the onboarding process?
So I agree with the onboarding process. I think it's a really important time to show your employee what your company is about, what they're stepping into. And hopefully before you hire somebody, you're doing your research on them and that they've done their research on you so that it's a good fit. So, you know, a lot of times people spend a lot of their resources, time, money, energy, everything, you know, bringing a person in as an employee only to find out they're a terrible fit.
Absolutely.
So during the onboarding process, there's things like, you know, you want to talk about your vision for the company and your mission statement, whatever it is. This is how we expect you to interact with the other employees or with our customers. And this is all part of, you know, who they are as an employee, but hopefully who they are as an individual too, that fits into your core business model.
That's a really important point, is the culture of what you do and the tone that you take. I think it really speaks to your work and obviously your team's work. And this is the opportunity to set that expectation up front so they know what they're getting into. I think that if you're growing a firm, it's difficult for any person to leave a Fortune 500 company that has a benefit structure that's clearly outlined, stock options, and they want to go to somebody who works out of an apartment. And there's no shame in that. In fact, a lot of people are really excited by that. But making sure that you have the foundation and infrastructure to support employees and their questions and their concerns with a smaller company is a really important expectation to set up front. So we've talked a lot about kind of the order of operation here, about establishing your entity type up front, making sure that you're set up for financial success for the first few years, knowing that you have some room to grow and also change that relationship as you kind of grow. In that process, making sure that you've set forth the clear rules about how you want to engage. That can typically be known as a business plan, right? And you can introduce that to your banking and your financial institution, and then of course that'll help you parlay that into employment, which is going to range from the independent contractor field to the full-time employment field, and also making sure that you are always financially reporting those things properly, so that when your employees, as well as yourself, are doing write-offs or anything of that nature, that's being done properly. So you have proper spending set up, those kind of things. So is there anything else that we can kind of summarize here of a checklist of things that people should really have attention to? I mean, really it comes down to going slow, examining the work, and making sure that you have resources to call upon to make sure that it's all being set up properly.
I think it's really important to have the resources. That's a really big deal. You know, the banking resources, an attorney, you know, an accountant, even if that's somebody that you're talking with once a year when you're filing your taxes, you want to make sure that you're on the right track. And I have a checklist that I'd be willing to provide in terms of like bookkeeping and when you want to complete things, even if you're doing it on your own, to kind of just keep you on track.
Absolutely. And one of my wrapping points here that is the most important thing is always be real when it comes to accounting. I think there's a lot of room for optimism and a lot of room for the check is in the mail statements from either clients or otherwise. And it's just something you gotta be really honest with yourself about, because it's one of the hardest conversations to have. In fact, it's the reason why the most fights happen and the most stress happens. And in fact, I believe that financial reasons are the reason for 92% of stress in people's lives.
Oh, I bet.
No matter how rich, poor, whatever you might think that you are, that does create stress no matter who you are. So being set up properly is the best way to mitigate that.
Right, I agree.
Well, Kristin, thanks so much for being here. I really appreciate our time together. And it's really eye-opening, I think, to make sure that I'm going to go make sure all my books are in order first before I end today. So thank you so much for being here.
All right, thank you for having me.
Thank you.